Well, good morning, everybody, and welcome to Friday, February 14th, Valentine's Day, for the pre-market rundown from TriggerCharts. And we're going to talk about a lot of good things today because markets have been very cooperative for those of you that have been working the insides and the outsides, the breakouts, the breakdowns, as well as the consolidations. And we're going to talk a little bit about that today, as well as some of the stocks that you want to discuss as well. Before we begin, I want to mention that, of course, this is for educational purposes only. It is not an offer to buy or a solicitation to sell any security. It's not to be considered a recommendation of any kind. You can see that on the screen that we're showing you right here. There is a nice little disclaimer that you should read. Well, let's clear this all up. Let's get into this. Let's close that down and talk about what's happening. You know, each and every week we talk about some of the basic market moving items, some of the drivers for markets. We also talk about what is going to be happening in terms of economics, earnings, et cetera, for next week. But this week was kind of interesting. We saw retail sales came out this morning. We'll get to that in a second. Basically, over the last week or so, the question is, well, markets are rallying on what? And can it continue? That's been the big question. It seems that every single time there's a drop in the markets, well, there seems to be a V recovery. And that V recovery has been swift. It's been head popping. And if you were short on any indice or any security, you probably got your head ripped off pretty good. The timing in this market on the short side has to be pretty much exactly right. Well, okay, with that in mind, the question then becomes, well, the market's definitely in rally mode, and can anything really stop this move? Can anything stop this market from going down? Even though a lot of people are questioning the fundamentals and the underlying underpinnings of what is happening with these markets. In other words, why is the market going up? Now, in technical analysis, we don't really need to know. In fact, we don't really even care. Why? The question why? A lot of us personally need that answer. We'd like to understand what it is, in fact, that is driving things. But again, technical analysis, charting, doesn't really matter. It's all about the trend. It's all about the opportunities, all about the breakouts. So what we have recently and what we are seeing go on is a continuation of central bank stimulus. I think there was 88 different central bank stimulative moves, rate cuts or otherwise, over the last several months. 88. You wonder why there's so much liquidity in the markets and why there are these incredible bounce backs. You're also seeing that, well, while there is liquidity, volume still is a little bit, I would say, understated in terms of not really a big volume move on the overall market. So a lot of people are just being, well, we could say lazy. Or maybe they're confident, or maybe there's just a small amount of complacency that's involved with the markets right now. Whatever it may be, again, in technical analysis, and you really have to understand this, we don't really care what the reason is. All we care about is being on the right side of the trade, looking at the trade bias and making sure we get that right for whatever the time frame that we're working on and whatever the period of time that we're holding that position. So the central banks keep on providing this promise that they are going to liquefy the markets, even though we see that there's essentially an absolute stop to the economy and the economic activity in China. Yeah, I mean, an economic stop. The latest discussion has been that we're going to see a negative 6% print possibly on this quarter's GDP in China. And that would not be too surprising considering the fact that we have all this containment going on, the isolation of what's happening, that flights are stopped going in, ships are not going in, going out. We see what's happening in the oil market and the glut of what's on the market right now. And what I told you last week, and I think that really pertains to this week as well, and whether or not markets are reacting to that right now, this ain't over. Already we saw the biggest jump in coronavirus infection rates in China just this week, and it's gone to a discussion of, well, China changed their classification of who they say actually has this virus versus who doesn't. Okay, you could say whatever you want. The fact is, a lot of people are really indicating and seeing that the infection rate is a lot higher than has been disclosed. And the question is, how long is this going to last? There is some indications this may not go away for about a year. 18 months is the latest estimate on when a virus a cure will be found, some kind of an inoculation to this. Now, with that going on, you see the cruise ships are really getting hurt pretty significantly. We saw that Carnival Cruise Lines, Royal Caribbean, Norwegian, all came out with estimates much lower, 50 to 60 cents lower, if in fact this just goes away now. Cruise lines are canceling cruises. Some cruises are just sailing around the sea, won't take a port. Actually, the latest one that was sailing around that no one would take just landed in Cambodia just yesterday, and now they're starting to offload some of the passengers there that are not sick, but who knows where that's going to go. So the suspected rate of infection is really over the 100,000 mark at this point, and probably a lot higher. We saw the 12th, I think it was the 12th case in the U.S. just yesterday, and Japan is seeing a significant decline as well. Japan's car sales yesterday came in some of the lowest rate in decades. As a matter of fact, I think it was Nissan last night that suspended its annual dividend. So there's something to be said about how this is going to impact the global economy. And the question then remains, how much confidence can the market have underlying all this? And with, in fact, if central banks are going to be able to, well, stave this thing off. Big question. How much lower do interest rates can go, in an environment where we have negative interest rates anyway? Economic reports have come out, and one thing that we do know, and probably one of the reasons why we're seeing the flow of monies into the U.S. versus around the world, is that the U.S. economy remains relatively strong. I mentioned earlier that we saw that retail sales are up 0.3% on a month-over-month basis, matching estimates across the board. So the headline number and the core number and the underlying numbers all seem to be okay. Futures sold off a little bit from where they were. They were up about 50. Now the Dow Jones futures up, well, 0. The SPUs, or the S&P 500 futures, up 2.2. And the NASDAQ, which just keeps on rising on just, I guess, underlying helium, is up 13 now. Germany's been terrible. Their industrial production numbers came out absolutely, unquestionably awful. I mean, a terrible number from Germany last week. And we're seeing that while there was this thought that, well, maybe there's a little bit of a bouncing off the bottom and the tide is turning, not really. The rest of the world is slowing. So again, if you're asking the question, if you need to know why, if you're just dying for that answer, a lot of it has to do with the fact that money is coming over here because our economy is actually holding up really well compared to the rest of the world. And inflation is nowhere to be found. And as inflation is nowhere to be found, we know that one of the central bank's mandates, we have price stability and we have employment, but we also have the fact that inflation at this 2% level that they've picked out, and that's an important level to look at, which we are nowhere near or getting to. We saw the KRI, the key reversal indicator. Let's bring that up on the chart. We saw that get to the overbought right about here. Let's kind of bring that out a little bit. We saw, I'm just going to use my hearts today. It's Valentine's Day, so I'm just going to use hearts today. There you go. Right about here, we got that overbought level. And we see that over time, when you get these overbought levels, you can see it move up higher and continue higher for some time. But oftentimes these red and bright red numbers are a sign that something has to reverse down and the market needs to get back to equilibrium. Right now, we're seeing that the market is what we say near equilibrium. It reached a +3, +4 intraday right down about 4 days ago. But the KRI is indicating that there is something that is telling us that we are a bit overbought in this market at this point, overheated, and we need to see some cooling down. That doesn't mean necessarily a big drop. If we see this all the way over at the +6 and +7, that's a warning sign. If we see it as a -6 or -7, that's a buy sign, a signal that, hey, you know what? This is overdone. So we're really not seeing it that much. We're seeing a +4, okay, a +3, and markets can stay that way for some time. You notice that, we saw it get a little bit overbought, but did come down a little bit. A little overbought here, did come down. Overbought here, did come down. But again, it doesn't necessarily have to implode. It just has to get back towards equilibrium to a point. And then what happens from there is we can see the continuation of the trend. And right now, the trend has been generally going higher. I mean, I don't think there's any question of that, going from here all the way up here, right? We're going higher on the markets. So with that in mind, we have to recognize that there is this overall trend higher, but yet not anything that I'm too concerned about. A lot of times we do also look at, let's see if I can find this, our Spearman indicator. We're seeing a 95 on the Spearman, a little bit high, but not yet rolling over. The McClellan, well, that's in the plus zone. It has a complex level below the zero line. That is not a really good level to be looking at, because that is telling us that this line, if it doesn't stay above the zero line for some time, may in fact fail. We do need to see a rollover of this, and usually these rollovers above the 95, below 90, and then it starts rolling is a really good sign of a question mark that goes on here. And then below that, what we have is a move below 0 is another sign that there is a problem. So with that, and just considering that, let's get back to some of the things we're talking about. Oh, we don't want to do that. I want to go here. Oh, that's twice I did that. There we go. I'll mention again the anchored VWAP. This is a brand new indicator that we put out through AlphaTrends. It's available on the Trading App Store, 10-day free trial. And what it looks like is this. You can just simply put VWAPs, multiple VWAPs on your screen. And there's a volume-weighted average price. You could use any time frame. You could use any indicator, any index that you want, any stock that you want. And you'll notice, like right here, this came right down exactly off of that open. If you drew this, it came right back into that level a couple times and then bounced right off. We have a line that is moving higher, so that's a good level to look at and something to consider. So the anchored VWAP is available on the Trading App Store now. It is live, and people are you can try it out. 10 days free trial. Earnings. We're starting to see a mention of coronavirus in the earnings outlooks by a lot of companies, and that's kind of concerning. A lot of companies are still waiting and seeing what happens before they come out with any specific answer to this question. But I would tell you that right now, most economists are looking at about a 0.5% decline in overall GDP on a global basis, probably about a 0.5% here. We also have the Boeing news that have come out. That's going to cause about a 0.5% reduction as well. We're probably going to be in the 1% range on an annualized level through the end of the year, depending on how long this coronavirus lasts, depending how long we see that the Boeing situation lasts, and how wide the spread of the coronavirus overall. Next week, we're going to see PPI housing starts, Philly Fed, and existing home sales. We did see the CPI number this week, right in line. There is no inflation, according to the official numbers, of course. Crude, OPEC has come out with a downgrade on overall oil demand through the end of the year. Of course, again, keep on mentioning this, the coronavirus is causing a lot of problems there. With that in mind, you have to wonder whether or not this is going to be a reason why OPEC says, hey, you know what? With that in mind, we're going to cut. They're cutting about 435 million barrels a day from their overall estimate of use that will be throughout the end of the year. And that being the case, I would not, I have 435,000 I think it is per day. So I would not be surprised if they actually reduce their production by about 500,000 barrels per day. So with that in mind, I would think that there is an opportunity to look at crude oil, and you did see it dancing off that 49. We'll get into that chart in 1 second. Pop it above 51 again. Make sure that you're, of course, on the mailing list. You can go over to TriggerCharts.com and check that out. And I'll mention also that there is a 10-day free trial for all of the indicators. I put a link right down below in the chat right there. Probably see it right down below, maybe to the side. I'm not sure where it is. Bottom line is, check that out. And of course, anybody who signs up for the Commander Series and you actually come on as a subscriber will get a 4-hour free coaching session that is online, that is used at your leisure and learning all about some of the things that we talk about here in great detail, as well as a good education in the area of technical analysis. So with that, let's click over the screen and let's check out some of the stocks that we're talking about today. Please put, I'm going to write the word here, put your stock symbols down below if you want to check that out. Well, Tesla down about $3 today, still not matching the fact that they are doing a $2 billion offering. Price today at $767 per share, I think it is. Currently trading at $779, so whoever got on that so far is the winner. This has been a parabolic move on the stock. We looked at this $599 level as a level it should come back to if it's going to retrace any of its move. We're seeing that there is a consolidation right now. The indicator, the autopilot for within the Commander Series is saying, hey, this is a no-touch zone. We had some great moves on the upside that showed these great opportunities to get long. Right now on a daily chart, it's saying this is a no-touch zone. Tesla has been pretty much parabolic, did that blow-off top that we talked about last week very nicely, and now is just trading in a sideways action. We always look at sideways action as horizontal through time that doesn't have any indications of a very quick move potential. We like to see very fast moves vertically through time. A much different situation where you see it moving up and you're moving higher, right? So we see it when a stock is moving, let's get our little stamp tool here again. You know, stock is moving this way versus this way over time. You know, what would we rather have? We'd rather have a vertical move through time, oftentimes much quicker and resolves much faster. You see these kind of moves are much quicker. This is now going to probably lag for some time until the next catalyst comes into play. What else do we got here? Oh, Cisco came out with earnings. Stock is trading, this was yesterday, trade down about 4%. This is an interesting area here because when you look at this, and we could use any of our tools here, but very simply, we take a quick box tool, we look, this is trading just very simply within a range right now. It did dip below, it may come up a little above, but you know, until it breaks out about this 51 level on Cisco or breaks down below about the 45 level on Cisco, there's really nothing happening here. You got a decent short in this area over in October through November. Some long opportunity off of the bottom that came up, and that looked pretty good, you know, but generally speaking, we did see this try of a breakout right over here. You know, if you look at this and you see that there is this area, it did try to get above our level right there, but just failed miserably and ended down on their earnings news. So Cisco is, we would call it a no touch right now. It's, again, horizontal through time, over time, moving just nowhere, basically. Crude oil is up again today, about 1.35% at 52. We saw this beautiful move. I would start to call this the banger pattern. It's getting there, almost there. Banger pattern usually means that we have to see the aileron, which is also available at the trading app store over at TradeStation. But the aileron is starting to come up a little bit. We saw this plunge after a really nice upward trend that stayed above the zero line for some time, came down. It was a double warning after we saw this call a short. Our autopilot called a short within the Commander series, and that was confirmed again by our momentum indicator, plus some moving averages turned. Well, we saw that moving average start to turn above the exponential moving average on a 3-day, moved above the 5-day moving average on the standard moving average, and all of a sudden we started to see this move up. Now, with a banger pattern, what we want to look at there is when we see it holding its level and holding its level of support. See that support level that was drawn right there? You can see that it held really nicely. We start to see a turn, a dramatic turn in the trend, and then a pickup, a move very significantly off of the bottom like we're seeing here. And when you see that, there is the opportunity. If this continues to stay above the zero line, we have a nice opportunity. Currently trading at 52.05. So 52.05 is right about here right now. We do need to see it get above that past resistance level, which is about 52.85 on the chart. Always just simply look from right to left. And we're looking right to left. What we have is this level right here. That is an important resistance point. If you can get over that, it looks like it's somewhat smooth sailing. I would say, honestly, if you get over 53, I'd be a lot happier. But you have an opportunity to get back to about 57, 58 on this. If, in fact, and I would expect and suspect that OPEC is going to come out with a cut, crude is going to be an interesting play. Now, there's some tangential plays on this as well that you can look at. For example, one of the worst hit, this is just terrible. This is the S&P Oil and Gas Exploration ETF, okay? On a daily basis, actually, let me go back and look at this on a weekly basis and show you. Actually, let's even go back on a monthly basis. Let's go look really long-term here. Hit an all-time low this week, going back to 05, 07. I don't think you go back any further than that, actually. So when we look at this and we look back at our daily, again, you can use any time frame you want. We like to do swing trading on the daily and on the 60-minute, 30-minute. But what we're seeing here is not quite yet beautiful, but enough to possibly dip your toes into if you think that oil is going to make a turnaround. There is so much sadness and upsetness on this particular sector. There is so much just absolute disgust with how this is performed. We went from 23 down to 18 in a matter of basically just this year, right? This year was at 24 down to 18 after oil plunged, the concern about the coronavirus, the concern about oil production, the concern about overcapacity in the oil industry. So when we look at this right now, we're starting to see a nice hold on the bottom, this 1895 level seems to be holding pretty well. You could use that as a good stop. And also because we are seeing, let's get this really close here. If you notice something really interesting. So what we're noticing is that there is a pretty good level, or I would say tightness of our high volume node and our support level. When you see that, you know there's a great deal of support within that level. If it breaks below that, you got some problems, and watch out below. But if in fact you can hold there and then see the opportunity for it to pick up, like it did a couple of times this week, but you know what, or last week, the opportunity to move up and would be very strong. So I would think there's probably a lot on the negative view of this, a real, just people not happy with this overall. And I think that when you look at this, you have to say that if oil does come up, there is the opportunity for this to be levered to that oil industry. Pinterest, Facebook came out with a competing product down about 2.63. Right now trading at about 22.92, which is right about below our level that we said it should probably come back into. Remember, we talked about these levels. See, these were drawn out last week. Talked about this last week when Pinterest had that really nice earnings level to break out through, came right up into it. We drew that. No mystery on that. We just looked back and kind of looked for some levels that were probably the levels that would be important. Now we're getting into that 23.20, so we're trading a little bit below that. Pinterest, after their really good earnings, coming down a little bit. How many of you, seriously, I want you to listen to this for a second. I've been talking about this for about 6, 7, 8, 9 weeks now. How many of you looked at this stock, SPCE, which since I started talking about this, clearly since the beginning of the year, has gone from about 10 to 24? Anybody? I hope some of you took a look at this stock because it really has been a high flyer. It's Virgin Galactic. It's I would say the potential for people to get off the earth away from the coronavirus maybe and travel somewhere else, because this is going to be for travel by individuals and people out, into the atmosphere, into other places, other worlds, maybe the moon, maybe Mars, who knows? So bottom line is that this has been a really interesting play here. Volume has been very robust. I think it traded close to 20 million shares yesterday. Redfin came out with earnings, did a really good job of its earnings number. Redfin really has no levels right now to really look at. You can go back some time, but broke out. This is a discount real estate service. New beverage, interesting. Some of the pot stocks are starting to come up. I like this pattern here. I like when we see this kind of level that has been just totally blasted out, exhausted to the downside, and then a really good move. Now, we need to see a follow through from here, basing out at about $2.10. But if not, you may be able to say about $2.57. If you get above these levels, $2.78, you have the opportunity to do some real work with this particular name as we see it, because there really is not a lot of resistance when they look from right to left. We're also seeing a little bit of an overbought going on here, but it is above the zero line on that. New Skin dropped off a cliff. This is a multi-level marketing. Well, they don't say that multi-level marketing per se, but it's a multi-level marketing company. Does a lot of business in China. And you have to look at this and say, well, this is it's 85 down to 29, a former high flyer as well. A couple of stocks that you want to look at here is QQQQ. There's not much to go on. QQQQ, well, we have a simple... does anybody see anything exciting here except for the fact that you just can't not make money, it seems? It's just going up and up and up. There are no levels to look at. There is nothing to compare this against. The only thing that we can do possibly is we can draw this back a little bit and kind of we can go, here we go. There is a range now. Bottom line, trading at about, 234 and change? 224 is your stop out, or is your is your support level. Below 221 is a stop that can get down as low as probably about the 212. If that happens, right now we're seeing a little bit of divergence here on the aileron indicator, and that's important to look at. This indicator gives us, again, momentum and trend, and it's really important to kind of look at that and kind of glance at that as we're seeing this, in particular where we can't find any levels. So, Anthony, there's not much to see on QQQ. Right now, one of the big problems that you have with QQQ is that it is dominated by the companies like Amazon, is dominated by Facebook and Microsoft. Apple hold about like 30-something% there. What else we got here? QQQ, AOBCO. American Outdoor Brands Company changed their name because they didn't want to be associated with guns. But American Outdoor Brands shooting up pretty high, rifling forward from overbought. Now here's where you would have really liked to see this, right? This gap down, this holding of levels, kind of this ramp off of, again, kind of a mini banger pattern that I would call right here. And the mini banger pattern is where we base out and we got launched off and then break through. And you see there was let's take a vertical line that we can use right here, and let's push that right there. You see, that's pretty much when we saw the break on and the breakout of the stock, and a yellow bar form, a green bar form is confirmation. Yellow is an alert, green is confirmation. That biases you to the upside, that biases you to the long side on a daily chart. You're probably going to see this starting to happen on shorter time frames, which I would consider doing and looking at on a regular basis. But you also noticed here that what we have is in tandem with that is a breakout below the zero line to above the zero line, and a pretty healthy breakout. And we haven't seen that really change for some time. I would say a slight hiccup in this range back in February. Right now, breaking up above. But let's go one step further, shall we? Let's take a look at this on a longer term time frame. Let's see what we got. So on a longer term time frame, let's get rid of this right here. And what we have here on a weekly basis, because this is really what you want to start looking at, is 1033 is a number that you really should be looking at. Why 1033? Well, again, all you have to do is you could very simply use your TradeStation drawing tools, find several areas that have previous support resistance, draw a line across it, very simple to look at, and we can see that it intersects pretty nicely. And with that intersection, you have to say that that's when that's, is the opportunity for it to move above. Try to move above yesterday. Right now, that level is exactly at, let's see, just double click it. We can find out. Otherwise. I said 1006. So it did break above. It's currently trading at 1026. We did see a call for a bias to the long side because we got the yellow alert. We got the green. Very easy. Very easy to do this because it's all about the colors, easy to see on a chart, no messing around, no wondering what's happening. It's clean and easy. I did that because I needed it to be easy for me to trade. I needed to understand things at a glance, what's happening, so I can go through a bunch of charts and see what's happening. So bottom line here is that this is above the level. However, really what you want to target here, I think, is a little bit higher, right about there, about 1063. You can get above that. What I see on this is something very interesting. I see that we have pretty much this range going back to October of nothing. Now, before that, we have a little bit of congestion here, but it was a drop. I would say, though, that drop allowed us to have these gaps that are going on right now. And with this, if we see it above that level, 1063, I think you have a good opportunity. If you wanted to look at this from an educational purpose, and how I would look at this is kind of sneak into this a little bit at a time, then bottom line is that we did, in fact, you could get a nice move upward. Anthony, we did get to your QQQ chart, right? So we're good with that. Any other quick, we have 2 minutes to go. Any other quick charts that you want me to look at? Things that you want me to find for you? See if we have, let's go here. See what's moving today. I don't know if you use this. It's a great tool. It's simply a hot list from TradeStation. These are built in. You can just add a hot list to anything. This is the top movers on the upside, top movers on the downside. See that we have Canopy Growth up 19%. Expedia Group came out with earnings up 12%. Kronos, another pot stock, up 8% today. Afri, another pot stock, up 8%. The warrants on Virgin Galactic up 7.5%. Aurora Cannabis. So we're seeing a lot of move into these Tilray. We're seeing a lot of move into these cannabis stocks. And that's why I picked out NBEV just as one that's kind of a CBD infused, could see a nice move. Look at this. It's just seen a horrible move on the downside. You can break above any of these levels and you can see a major possible short squeeze or the potential for a very significant move higher. So bottom line is that I think we're good. Markets are open. Have a great Valentine's Day. Tell the one that you love them. Let's see if the markets will love us. Make sure you get into those good trades and check out TriggerCharts.com. We have a lot of videos on there, and I'll see you again next week. Thanks so much.